Hi guys, welcome back to the channel. So today I want to talk about the real numbers, right? And what's really behind the unemployment rates and so on and so forth. And then the question that arises from all that is, are we actually in a recession? So while politicians like to throw out numbers and say, look, all these jobs were created, and they like to give each other high fives and say everything is going amazing, but in reality, a darker story is emerging just beneath the surface of our economic data, right? The numbers that should keep us up at night aren't the ones that are making headlines, right? They barely talked about it, right? But the ones that are getting quietly revised down months later, so they come out with a big number, they tell you, hey man, look, all these jobs are creating, and then months later, when no one's paying attention, those numbers get revised down, and no one talks about it. All right, but so when you start to look at these numbers, it's actually showing that there are cracks in the foundation of how America funds its massive spending. And we're going to begin with the story that happened last year. So when 818,000 jobs that never existed, right? So let's just talk about that. So this is what happened in the summer of last year, right? A moment that should have sent, shockwaves to every American household, but no one ever talked about it. It kind of made, I don't know if you guys heard about it, but it kind of it was brushed under the rug, okay? Because the Bureau of Labor Statistics dropped a bombshell. They revealed last year that 818,000 jobs that were supposedly created between April of 2023 and March of 2024, it never actually existed. It never actually existed. It was all a lie. It was BS. And this is not just a small thing. This is almost 1 million people, 818,000 jobs that the government told you, hey guys, look how great we're doing. The economy's doing amazing. Look, all these jobs are created. It was all a lie, BS. It wasn't true. There was actually one, there weren't too many news networks that picked it up, but there was a quick story on this, and I'm going to go ahead and play that video for you guys right now.
Vision from the Labor Department shows the U.S. economy created fewer jobs than first reported over a 12-month period.
That correction is in the hundreds of thousands. It's a big oops. It's fueling concerns the labor market is not as strong as previously thought. Laura Aguirre has details.
It's an abrupt about-face for the U.S. labor market. Newly revised numbers released by the Labor Department Wednesday morning were stunning, showing 818,000 fewer jobs created over the 12 months leading up to March 2024 than previously reported. Data revisions are common, but not to this degree, and Wednesday's correction is the Labor Department's largest downward adjustment since 2009. Now, behind the eye-popping headline, many economists had indicated they were expecting a sizable revision, possibly up to 1 million jobs less. So Wednesday's number, while still high, did stop shy of that. And labor's data shows sectors like private education, healthcare, government, and other services adjusted up in new jobs. Overall, the revision signals a labor market that is still hiring, but at a slower pace. It's also considered preliminary and won't be finalized until February of next year. So what about the Federal Reserve's anticipated September interest rate cut many Americans are banking on to make loans and credit cards a little more affordable? Most economists agree Wednesday's revision not only cements that cut next month, but it could spur the Fed to make it deep.
Well, you guys get the point, right? So we're talking about, think about this for a second. The government told you to create 1 million jobs that never existed. They're lying to you, which makes you think, what else they could be lying about? Can they also be lying about the health of the economy, what's really going on? Are they really telling you what the real truth is? I mean, we're talking about nearly 1 million people that the government just basically erased with a stroke of a pen, right? They just told you all this, almost 1 million people got jobs. These people never existed. They were lying. This is not just a small rounding error. Like, oh yeah, we made a mistake. This is almost 1 million people. Right. This revision was the largest downward job revision in 15 years. OK, instead of this robust 242,000 jobs that they told you that they were being added each month, that we're talking about, blah, blah, blah. In reality, look at all these jobs. These jobs are great. But when no one's looking, those job numbers are revised down. It wasn't 242,000. It was about 174,000 each month. So they were lying this whole time. Right. But here's the thing. Here's where this gets a little bit troubling. This massive downward revision, like this in history, always signal a recession is about to come or we're already in one. All right, so let's think about this for a second. Let's go back to 2008. Remember in September in 2008, initially the job loss, they said, oh, look, we only lose 159,000 jobs. Don't worry about it. It's no big deal. It's only 159,000. But then it was revised months, month after month. Each month it was revised down until we hit 450,000 lost jobs. They told you it was 159,000 that we're losing, but in actuality, it was 450,000, right? And this is almost a similar pattern. Like we're kind of seeing the same kind of storyline, right? Now, let's fast forward to this year, July 2025. And the trend of this whole job thing continues, right? Is lie after lie after lie, continuously. They told you that the economy that added just in July, the economy added just 73,000 jobs. This was way below expectation. But more importantly, job growth for May and June were revised down by a whopping 258,000 positions. That means there's 258,000 people that got fired or couldn't find jobs, okay? According to Goldman Sachs, this represented the largest 2-month revision ever recorded outside of economic recessions. Now, if you guys remember from the last administration, we kind of changed the name from recessions, like because it was like 3 months of normally a typical recession says 3 months of downward negative data, job data. Technically that's a recession. But they said, oh, no, this is not a recession. Guys, please, this is not a recession. We're in a tactical recession. Like whatever the hell that means. We're just changing terms, changing names. Instead of saying, yes, we're in a recession, they told you, oh no, it's tactical, right? It's tactical. It's not a real recession. And the news media and everybody bought that crap. It's unbelievable. We were actually in a recession. The economy, we had a weak labor market and people couldn't find work. But yet they told you, oh no, guys, don't worry about it. This was, it's tactical recession. It's not a real one, okay? Right now, the government, again, is lying to you one more time. What they're telling you is that, look, this is the greatest unemployment rate. We've never seen an unemployment rate this low. We were supposed to be getting all these jobs. Are you, how do you guys feeling? You feeling that you're getting all the jobs yet? Are you having jobs come out of your ears? I thought we were getting so much jobs. We're going to get so much jobs. You're not going to know what to do with jobs. The jobs are going to be everywhere, right? You won't be able to sleep without having jobs everywhere. But where are these jobs? We don't have them. We don't know where they are. We're losing jobs every month. All right. So, but now they're telling you unemployment currently right now is at 4.2%, right? But in actuality, this whole thing hide a much grimmer reality. Let me see if I can find this chart for you guys real quick. So there's so the U6 unemployment. So basically what that does is, let me see if I can put this up for you guys while I talk. All right. So the U6 unemployment, is basically showing you that, basically what that says is that, people who are looking for work, right? And, let me see if I can put myself here on the screen. Okay. So basically what that says is like people, the youth unemployment, which includes people who've given up looking for work, all right? And those who are stuck in part-time job, but they really want a full-time job, but they can't find full-time work. That number actually tells a different story. So if you guys can maybe, pause the video, you can look at that, take a look at that chart. But what that U6 unemployment shows that actually unemployment rate is at 8%. It's not where the government is actually telling you. Unemployment rate is actually going up. It's taking up more and more and more, all right? To put this in perspective, that's nearly 8 out of every 100 American in the workforce who are either unemployed or underemployed. During good economic times, this number typically hovers around 6 or 7%. We're seeing levels that suggest significant economic stress that is hovering beneath the surface that no one wants to talk about, right? Think about this. The long-term unemployed, right, those who are out of work for more than 27 weeks, jumped by 179,000 people in July alone. I want you guys to think about that. People who can't find work for 27 weeks or more, right? That number of people jumped in 1 month, in the month of July, by 179,000. But yet they're telling you the unemployment rate is 4%. It's great. Unemployment is it's unbelievable. It's doing amazing. Now, when you get numbers like this, typically it signals a recession. The Fed cut rates to help growth and spur growth and so on. But the Fed won't do that because they are seeing inflation numbers because of tariffs. So where now we have higher inflation rate, unemployment is heading down, companies are closing, but yet, we're like, hey, we can't keep rates because typically we have, to speed up the economy, to help investments and so on and so forth, lower rates. But now we can't. The Fed is stuck in this weird spot. But we just lost 170,000 jobs in 1 month alone. That is accounting for about 25% of all unemployed Americans. When people can't find work, okay, when people cannot find work for 6 months or more, it signals a deep structural problem in the job market, okay? And that is a big problem. Now, here's where the story gets, as if it can get a little scarier, but it does. The U.S. government needs about, every year we go through this with the debt ceiling and so on and so forth. The government needs about $2 trillion. That's a T, $2 trillion worth of new debt every single year. And that's just to keep the lights on. $2 trillion just to keep the lights on. But what's happening right now is finding buyers for this debt is becoming increasingly difficult. No one wants to buy this debt. It's a risky bet. Now there's this one country that was buying a lot of our debt, and you guys could probably guess who that is, and that is China. China was once America's largest foreign creditors, all right? And China has been systematically dumping U.S. treasuries. So they're not dumping everything all in one time. That would cause ripples in the market. But every month they just dumping. Okay, China's holdings right now. China holds about $756 billion of U.S. debt, and that's as of May of this year. All right, this is the lowest level since 2009. China has been getting rid of these things, man. Okay, the amount that they hold, $756 billion, they were holding $1.3 trillion between 2012 and 2016. Okay, China's like, look, man, I don't think you guys can get your house in order. There's a lot of back and forth going on here. You have a massive debt, over $37 trillion. Your unemployment rate is way higher than you're saying. You're fudging numbers. And you know what? And plus tariffs, there's war, that's like we've been antagonistic towards them. So they're like, okay, well, we're just gonna start dumping your treasury bonds. We're not buying. And guess what? China's not alone because we're going around making enemies out of everybody. Foreign ownership of U.S. debt, the meaning people, other countries that buys our debt. So when the government needs to raise money, they sell bonds and they hold auctions and so on and so forth. In other countries, they look at the U.S. as a safe haven for their money. They look at us as a good place to park money. Well, they are less and less of them are looking at us as a safe bet. The amount of countries that were buying our debt went from 50% in the early 2010s to right now is to just 30%. That's a 20% loss. Okay. And this is not the end of the story. And to make things worse, the Federal Reserve, which used to be a reliable buyer of government debt during quantitative easing, meaning when money lowers and lower, it's because what the Fed would do is they'll buy the debt to lower interest rates and so on and so forth. But now, even them, they are selling $5 billion worth of treasuries every single month. So basically $60 billion a year. They're not buying as much as they were before. Okay. This is $5 billion less demand for U.S. Treasury debt each month at the time when the government actually needs it more than ever. I think they always need it more than ever. But they, because we can't stop spending. We're involved in multiple wars. We're doing a bunch of crazy stuff. All right. So now who is left to buy all this debt? Well, that leaves you and I and private investors. All right. It leaves for us to do all the heavy lifting. We're talking about pension funds that we all, if you have a job with a pension, we're all in this. Pension fund, insurance companies, savers, people who, look at U.S. Treasury bonds as a good, safe haven to put their money. So because now all this instabilities, all this data, all these things are going on, they're asking for they want higher yields, right? Because now this is becoming a risky bet. It's no longer a safe bet anymore, okay? Especially when you see in mounting deficits, political instability, inflation concerns. Yeah, you're gonna want higher yields. The yields are gonna spike because you're not becoming a risky yields, meaning they want more return to lend the U.S. government money. They want higher interest rate. They want a higher return because they may not get their money back, right? It's becoming a risky bet, a risky business. Recent Treasury auction that we held one I think they held one in August of this year for a 30-year bond. It went poorly. It was horrible. Not a lot of people. They didn't get a lot of buyers. It was weak, a weak response. Okay, even when they dropped it to 10-year, even the 10-year auction, which usually get a lot of buyers. This is a short term. For 10 years, you get your money back right away. Even that had short demands. Okay, and every indicator, everything is flashing. Every signal is flashing recession. Okay. Multiple economic indicators are now recession is showing a recession. The 3 to 10 year Treasury yield curve inverted and early this year in February 2025, a phenomenon that has predicted every single recession since 1960, with only one false positive in 1966. When short-term rates are higher than long-term rates, it typically signals economic trouble ahead within 12 to 18 months. So if you're planning on maybe buying a home, making big purchases, maybe I'd wait till next summer. I'm not giving you financial advice. I'm just looking at the numbers. I'm just, telling you, maybe don't go buy that car. Maybe, don't go get yourself into debt. In times like this, a time of uncertainty, I would say, cash is king, have at least 6 to 8 months in reserve. So when the crap hits the fan, people losing jobs and so on and so forth, at least you have something to fall back on, right? The perfect storm that we're seeing that is brewing right now, it's I don't know, man. It's convergence of multiple dangerous trend that is coming. Okay, we're looking at unemployment data that's been systematically overstated. Lies, they've been lying. The unemployment data, with massive revision revealing the job market was never as strong as the government told you, okay? A government borrowing crisis where traditional foreign buyers are reducing purchases just as the U.S. needs to issue record amount of debt. Less people are buying our debt. Meanwhile, you would think that we'd be like, oh, we'd be cautious. Oh, let's not go crazy with the debt. Nah, let's just go balls to the wall. Let's keep spending more. Do these people sound responsible to you? But go ahead, you can take their word for it if you want to. So the Federal Reserve withdrawing the bond. The Federal Reserve also withdrawing from the bond market through like quantitative tightening, removing a key source of demand. Private investors demanding higher returns to compensate for increased risk, driving up government borrowing costs. Classic recession indicators like yield curve inversions and leading economic indexes are flashing warning signals. Okay. Now, here's the bottom line, guys. The official story says that we're not in a recession. GDP growth remains positive, and the headline unemployment rate is manageable. This is what they're telling you. But when you look just a little bit, when you just dig just beneath the surface a little bit, okay, when you look at the jobs that never existed, the real unemployment numbers, the growing difficulty funding government operations, and the array of recession signals, a different picture emerges. We may not technically be in a recession, but we're walking this very tight rope. I don't know. It's a very tight line. I don't know when everything crumbles. I guess that's when they will acknowledge it. Okay, but the margin for error here is shrinking, and the economic foundation is shakier than the headlines are telling you. Okay, The question isn't whether we'll face economic challenges. The question is whether Americans are prepared for what's coming when the music stops and there are enough chairs. Okay, so what do you guys think? Let me know. What do you think? Do you think we're in a recession? Do you think the economy is doing great? Do you think, hey, man, my stocks are doing amazing, so therefore we're not in a recession? You're optimistic or you're hopeful for the future that we're gonna, this is the party gonna keep going. Just let me know. Leave it a comment in the section below. That is going to be all for today, guys. Please, if you like this content, if you like this video, please give it a thumbs up, like, share, and subscribe. And I will see you soon. Thank you.